Hello friends, James Stevenson back with part 16 in my forecast video review series for Tesla earnings. Let's check in with Loki. He is sleeping when he ought to be eating. I gave him his food in the previous video and he did not take it. Let's see if I can try to coax him out. Buddy, I've got this delicious pate here for you. Don't you want to eat this? Huh? That's good stuff, right? That's good food, huh? Don't you want to eat more of that? Okay, we'll see if he eats or not. If he does, he'll come over, and I will try and move the camera over. There you can see him chomping down on some kibble. Maybe that'll get his appetite going a little bit. He'll come over and eat the rest. But in the meantime, I will jump back over. You can keep an eye on Loki in the Loki cam right here below me. And I will keep on moving. Now, what I didn't show you earlier was my PowerPoint deck, which is what this is. So, all these charts you saw in parts 1 through 14 earlier. And I just happened to cut myself off at exactly the right row in the previous video for having shown this one slide. So, are you going to get a 68-part video review series from me? No, you're not. I'm not going to make one video per slide from here on out. But I think I will make some videos that only cover one slide. I'm going to have to make a few videos that cover a bunch of slides each, or else we'll still be looking at these videos after Q1 earnings have been announced. So let's do slide 27. So you probably can't see it very well there, so I'll come back over here and we'll just review down to row 1234. So we ended off here at row 1202 below my income statement, which is the GAAP income statement as reported under GAAP rules, right? That's what that's doing. So what do I do in my next section? Well, I do a bunch of different things, so we'll just go down the list. Here on row 1203, I've got a row for Tesla stock price forecast at 30x the next 12 months adjusted EBITDA non-GAAP. How did I pick a multiple of 30x next 12 months adjusted EBITDA non-GAAP? Well, it was doing pretty well in prior years. If you go back and you look at where Tesla's stock price was in 2020 and 2021, during the bull market, it paired up okay with a 30x multiple on the next 12 months adjusted EBITDA. Since we entered a bear market in 2022, that multiple has been doing a lot worse job approximating Tesla's share price. But if the bull market had been uninterrupted, we perhaps could have seen Tesla's stock price closer to these values as time went by. And then, maybe in the future we will be back to these values if the market wants to apply a 30x multiple to a forecast for the next 12 months adjusted EBITDA that matches mine. So if you think there's a low likelihood of either of those two things happening, you may have a good point. I tend to forecast more earnings than Wall Street does. Wall Street tends to see their expectations get beaten when Tesla reports earnings. And I see Tesla miss my earnings expectations a little more often than Tesla beats them. They do beat my earnings expectations sometimes, but usually for a full forecast year, I'm a little ahead of where Tesla is, but still far more accurate than the Wall Street analysts are over the long term, and certainly more accurate than Tesla Q, who has been predicting for many years that Tesla would be bankrupt by now, having gone out of business after never producing any profits. Okay, the next row here is showing a trailing 6-month average Stock price forecast. So for these closed periods, I've gone and looked up what the trailing 6-month average stock price was. So you can see what that is. Kind of hard to believe that it was as high as 235 in Q4 of 2022, but it's a trailing 6-month average, so that includes Q3 when the stock price was a little higher, as half of that. So a little bit lower here in Q1. And I've got this forecast to rise over time, which is based on weighting a couple of these things together. So in the case of my Q2 forecast, it's taking the average of what's being forecast in Q1 and what this 30x adjusted EBITDA multiple would give. So that's what's sitting in my forecast. Next row is a trailing 6-month market capitalization in billions. What's this doing? It's just taking the number on the row above, multiplying that by whatever I'm forecasting for the shares outstanding basic, which is what you get in your market capitalization. The diluted shares aren't all out, so they're not all part of the market capitalization forecast. Some of those haven't been exercised yet, like Elon has a whole bunch of stock options he could buy under his 2018 CEO Performance Award. Those shares are counted in the diluted number, but they're not counted in the basic number because he hasn't bought those shares from Tesla yet. They're just available to him whenever he would like to buy them. Highest CEO plan market cap achieved. That's been $650 billion for a long time. I just needed this here to calculate how much expense Tesla would show on the stock-based compensation expense row for SG&A, where the CEO Performance Award gets recorded. So I've got a few rows here that did that. Quarterly annualized adjusted EBITDA was another one of the targets. Then revenue was next on here. So by Q2 of 2023, Tesla will be over the $100 billion quarterly annualized revenue mark. And Elon didn't even need to use these tiers to be awarded all 12 tranches under his plan, because he got to all of the EBITDA tranches first before he needed to get to the revenue tranches under that plan. Probably more information than needs to go into this video. Then I've got just a row here for figuring out what the approximate quarter-ended date was so I can do some math. Some more rows here for the CEO bonus forecast. Hey, how many milestone goals has Elon achieved? He achieved the 12th goal here, which was the $75 billion quarterly annualized revenue tier, and doesn't need to try to achieve any more tranches because he's already achieved all 12. The max allowable under the plan, and gotten all of the bonus shares due him. So after adjusting for the 5-for-1 split and the 3-for-1 split, that's a total of 304 million shares that Elon can buy. But there won't be any more shares issued to him because he is out of his plan. So Elon is now working for free until the board of directors presents him with another compensation package, whatever the compensation committee decides they want to propose for Elon to remain CEO at Tesla. So yeah, that expense was just the very last bit of the $2.283 billion max allowable under the plan. So only $4 million worth of expense hit in Q4, and no more will hit until that next plan goes into effect. I do forecast something for CEO stock compensation because I feel like it's unlikely Elon will continue working for free forever. Maybe he will for all of 2023. I don't know. But I do have something penciled in here, which is 50 million in Q3, 150 million in Q4, and each of the following quarters through the end of 2025. Something like that may be about ballpark right. We'll see. The next row here is other SG&A stock compensation. This is how much stock compensation goes to everyone else whose labor expense would normally hit the selling, general, and administrative areas of Tesla's organization. So everybody who works at Tesla, once they meet the criteria, eligibility criteria, are able to earn stock-based compensation, including everybody who works in SG&A. So they've been making a lot more stock compensation cumulatively than Elon has in the year 2022, and probably will in 2023 as well. That's what I'm forecasting. Then the non-stock SG&A expense is everything else. So this is mostly salaries and benefits associated to the people who work in, human resources and finance and marketing and security and legal and whatever other departments you would think of a headquarters needing for a major corporation. Then there's also stock compensation that hits as cost of revenues. What would go here? Any stock compensation earned by people who work at factories. If you work at a production location, your costs of labor get recorded as cost of sales or cost of revenues, as Tesla classifies it when they report this out in the 10K and the 10Qs. Then there's also stock compensation that hits research and development, so people whose labor would normally hit in the research and development area. A lot of computer types and programmers and engineers and the design team working for Franz. A bunch of other folks are going to hit in the research and development area, probably the autopilot and the full self-driving teams. Spending money on Dojo and computers. Those people's stock compensation would hit here. And normally there's not any hitting restructuring and other, but if there were stock compensation owed to people who were laid off, that would hit here. So sometimes you see an amount there. So here's what I'm forecasting for those for 2023. Just a little bit more growth on top of what we've seen hit already. Then for other, including dilutive, convertible debt, buyout of non-controlling interests, etc., usually we see a really small number here. Sometimes that number rounds to 0.000 negative, like it did in Q3. It was $35 million in Q4, but I just don't even bother forecasting this line because it's such a wild card. It's hard to know what to expect, so I'll just expect 0. And hopefully won't be off by a lot on that line. And that's how you get to non-GAAP earnings. The difference between the GAAP earnings and the non-GAAP earnings is the total stock-based compensation. So the CEO stock comp, the SG&A stock comp and cost of revenues, research and development, and restructuring and other is how you get to the total stock-based compensation. Tesla reports, but I forecast it at this detailed level to make sure it looks right. It doesn't look wacky or crazy versus what Tesla has reported in prior quarters. And that's row 1233. Where did I say I wanted to go through? 1234. So we'll do one more row. That's the as a percent of revenue row. So this number is worse. Non-GAAP earnings as a percent of revenue falling to 13%. That's due to the big price cuts Tesla took in Q1 globally, as well as limited production from Shanghai and Austin and Berlin not having ramped fully yet. So a lot of that will reverse throughout the course of the year, and this number ought to get a lot better as the year goes on, and maybe we'll be at record highs by the end of this year if Tesla can do a lot of stuff right. And that is my video for episode 16. So we'll check back in with Loki, who would rather sleep than eat in his bed. And with that, I'll outro and say if you've enjoyed today's video, click the like button. If you're not subscribed to my channel, why not go ahead and subscribe to my channel? And click the notification bell to get alerted whenever I post fresh videos. Thank you to everyone who supports me through Patreon or by joining my YouTube channel, especially my executive producers who joined at the top tier, Kathy Kitchler and Halter Ferguson Financial, and I'll see you in the next one.